Hey guys, welcome to another video. This one I want to talk about graphite mining. This is a discussion that actually came up on my Patreon the other day. There was a particular mining company that we were looking at, and it sort of sparked me to look at the overall opportunity in graphite and this company in particular. So graphite is strategically important right now because it's a key element in the production of EV batteries. There's a looming shortage coming in graphite, and so I think we're going to see a lot of price action in both graphite and graphite mining companies over the next few years. So I think it's a really unique opportunity. I want to tell you about what's driving it, what some of the situation is around graphite, and stick around to the end because I want to tell you about a particular company that is really uniquely positioned to make a lot of money on this particular trend. And I want to do a bull and a bear case on this one, tell you a little bit of the good side of the story on this one, give you the downside risk of this particular company, and then finally I'll give you my opinion on whether this one is a good investment or not. So let's get into it. Okay, so first up, I want to talk about the demand side for graphite and what's going on here. You know, it's all about EV batteries. And if we look at the slide here, there's a lot of different metals that are used in EV batteries, and they're all looking at a significant growth over the next decade or so. You know, some of the ones here on the top are more common metals, and over time, it has been easier to ramp up production of nickel and aluminum and this kind of thing from current mining capability. So there hasn't been, I think as much of a shock in some of these ones. And then if you look at the bottom of this chart, you know, lithium and cobalt, I think they've already gone through their supply-demand rebalancing, I guess, over the last few years. Lithium miners have really ramped up production and sort of met the demand, or at least close to it. So I think there's less of a gap there. I think the gap that remains is kind of unique, though, to graphite, because graphite has some unique constraints that the other battery metals don't. And so that's what I want to focus on here in this video. So I pulled this slide from a graphite mining company, and you know, I like what they're doing here. They're pointing out that graphite, more than any other metal, has the biggest supply gap heading into the future. You know, if you look at the current production of graphite, it's not that great. If you look at the current demand, it's projected to have really, really strong growth. And there's a really good slide here, I think, that talks to that specific gap that's looming in terms of the supply. You know, right now we're sort of at an equilibrium point in terms of the graphite supply. But over the next few years, that's not going to be the case. You know, we're actually going to ramp up demand by a lot. It's coming from a lot of these different situations. So we're going to see a projected shortfall, heading into the next few years. And, I think we're absolutely going to need new mines. We're going to need existing mines to expand. And so there's going to be a strong push within industry to ramp up graphite production to meet this demand. And we're seeing it all over the place. There's a lot of graphite mining companies that are now developing their deposits. They're actually ramping up their plants and their operations. They're actually raising capital. So it's a pretty exciting time to be a graphite miner. There's a lot of action right now in that particular space. And so you can't really understand graphite demand unless you understand what's going on in China right now. China has 70% of the world's graphite, or even a little bit more than that, in the ground. And if you look at what's happened in the Chinese domestic market over the last few years, their own demand for graphite in their own EV battery manufacturing and in industry in general has skyrocketed. You know, they've actually doubled their consumption, but production has only increased by about 38%. You know, like I say, they have a lot of it in the ground, but it's difficult to get out of the ground. Winter actually limits mining operations in China by quite a bit, and so they're not able to keep up. The Chinese government knows this, and so they're not keen to see export growth in graphite. And so you see that in terms of the exports that are actually shrinking or stable over the last few years. That's probably going to continue into the future as China keeps its own graphite in its own domestic market. And we absolutely know that's the case, right? I mean, Tesla has said that they want a stable, reliable North American-based supply of graphite. The US and the EU have both declared graphite a strategically important mineral. And so there's a lot of focus right now politically and commercially on developing developing supplies of graphite within North America. And if you're looking at graphite within North America, you're looking at Canada, because that's where all the graphite is. It's in the northern regions, a little bit in Alaska, but primarily the core opportunity, I think, lies in these Canadian companies that are developing their graphite properties. And so that's really the company I want to talk about in this particular video. It's a company called Nouveau Monde. They're located here in Canada, in Quebec, and they're probably at the top of the pile in terms of the crowd of graphite miners that are out there in this business right now. And so I want to tell you about the company. I want to do a bull case. I want to do a bear case. There's a lot of stuff I like about these guys, but there's also some downside risk that I think needs to be understood and needs to be looked at. And at the end of it, I'll give you my opinion on which particular case wins.
What's the upside potential?
Okay, the first point I want to make here is that Nouveau Monde is further along than the rest of these graphite mining companies that I'm talking about. They've actually reduced a lot of their early stage risk by passing some of these early milestones in terms of, getting the plant up and running, getting some of the key agreements in place, navigating the political landscape of actually creating a new open pit mine in a particular community. So the risk of that kind of thing going off the rails is reduced because they've already passed those hurdles. And it also means that revenues are a lot closer for this company than they are some of their peers. They're not actually that far from actually becoming profitable. The other thing that I think demonstrates that they are further along is this demo plant that they've already built and that they're already using to, figure out the process of high-end refining of graphite. The type of graphite you need for battery anodes is specifically called spherical graphite, and it's currently produced synthetically today in a lot of EV battery manufacturing. But these guys are actually looking at pulling it out of the ground, refining it, coating it, and actually getting very, very close to the point where it's immediately usable in an EV battery right in this demo plant. So I like that little bit of vertical integration. They're not just focused on pulling the raw stuff out of the ground. They're actually into the refining business a little bit as well, so they can put a very specific graphite product out there in the market in front of their customers. NOU is unique in terms of their commitment to clean mining. Mining doesn't have a great reputation in Canada from the last several decades of pollution and downstream impacts to watersheds and all this kind of thing. So, these guys are coming out of the gate and saying, hey, we have a 50% reduced carbon footprint because we're actually planning in advance to address a lot of these environmental problems. Uniquely, they're actually planning for an all-electric fleet. They're uniquely positioned within Quebec to access cheap hydroelectric power. So the electricity that's flowing into the project is green as well. The next point I'll make here is profitability. Their economic viability assessments on the mines look good. They claim that they can actually come out with the lowest cost per ton on the extraction side and the highest profitability per ton on the actual marketing side of things, right? So if this is true, I think it's a good story. They're actually able to extract additional value beyond just what the commodity price will support. I love the opportunity that this company has in terms of strategic location and market access. They're on the St. Lawrence River, which gives them a port shipping capability out to the EU. Graphite can head that way. It can actually be loaded onto rail cars and brought down to the US market. Rail links between Canada and the US are really strong. And they have, of course, immediate access to the Canadian market, both through waterways and through road transportation. So, you talk about a company that is tightly integrated within that strategic North American market. It's absolutely these guys. And finally, the last point in the bull case here is that these guys are looking to actually uplist onto the American exchanges. Right now, they're listed on what's called the Canadian Venture Exchange, which is a little bit more lightly regulated, I guess, than the primary Canadian exchanges and certainly the American exchanges. So they're looking at doing a share consolidation, getting the price up to meet the listing requirements in the American markets. And they're then going to be able to tap into additional pools of capital investment. It's not so much the magic of uplisting that I think is going to help these guys. It's that access to additional capital to fuel growth, which is a really, really good story for the company that they feel as though they're able to actually make that leap. And if they do, it's a huge vote of confidence that they're putting out there for potential investors. And it's also going to get more eyeballs on the stock. It's going to bring more buyers in. It's a win-win story all around for this company if they actually manage to uplist.
Let's talk about risk.
Okay, what's the bear case? Well, I'll tell you, one thing is synthetic graphite. I mean, right now, like I said, a lot of anode production capability uses synthetic graphite. It's expensive. Right now, it's a heck of a lot cheaper to actually build a new mine than it is to build a new synthetic graphite production facility. But, is that going to be the case forever? Or are there technological improvements to synthetic graphite coming down the pipe that actually could change that economic situation? Don't know, but I see it as a risk. I can almost guarantee you there's people out there that are working on making synthetic graphite more cheaply, and that could be a threat to the commodity price. Second point I'll make here is that existing mines can be expanded. There are mines outside of North America. So, there's a lot of focus on this North American market politically and commercially, like I said, but when the rubber meets the road and cheap sources of graphite hit the market from Africa and from Australia, some of these other deposits around the world, are these companies actually going to do what they said they would and buy North American graphite? Well, I don't know. If the price is higher for that North American supply than what they can get internationally, then I'm not quite sure they're actually going to follow through on these commitments. Next thing I'll say here is that right now, graphite is an absolute requirement for EV battery manufacturing. Is that going to be the case, years from now when new battery technologies come along? We know that first-gen solid-state batteries still need graphite, but second-gen solid-state batteries may not need graphite. And so is there a finite lifespan here for graphite demand in EV batteries? I don't know. I think, though, that lithium-ion batteries are so prevalent, and we know at least the next several years into the future there's going to be a ton of demand for them, that I think right now, at least, the demand side for graphite is safe. There is some opposition to the mine from a First Nations group in Quebec. It hasn't been tremendously effective so far. Government approval has gone ahead in spite of the objections that they've put forward. So I think on the bear case, there is some potential for a threat here to develop down the road, right? Are they going to be able to mount an effective opposition to the project that might actually hurt the business? No idea, but it's something that you should probably keep an eye on and see what happens here into the future. Okay, and the last point I'll make here on the bear case is all about value. I talk about this company being at the top of the heap. They're further along than anybody else. Well, of course, the entire market knows that as well, right? And so the price has been bid up. If you look at a price to book comparison between this company and its peers, you can see here that they're trading at over a 16 times multiple of book value, while some of the peers are down 1, 2, 3 times multiple. So, the market has demonstrated a willingness to pay a premium for these guys. And if you want to buy in at this price, you're also going to have to pay a premium. Okay, so let's wrap this one up. So the bull case, guys, it's based on the supply-demand imbalance. It's based on the tailwinds that the company has. It's based on the fundamentals of the company itself and how they are further along than anybody else. So I think the bull case is really strong. I think if you try to make the bear case on this one, then you're going to be looking at value. Are you willing to pay 16 times book value? And I think you're going to have to look at the potential for a future technology disruption. How confident are you that the demand for graphite is in fact going to remain strong long into the future? To my mind, though, the bull case is absolutely a heck of a lot stronger in this one. I think that the demand for lithium is strong. A lot of market participants agree. And I think if you really want to ride that wave, this particular company is a no-brainer investment. I think it is worth paying the premium that you would have to pay to get into this one. And I think the situation is only going to get better if and when they uplist on the American exchanges. So guys, that's it. That's my story on this one. Please throw the video a like. It absolutely helps the channel grow. Don't forget to subscribe and ring the bell, and I'll see you in the next one.